Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it exhaustion, and we're going to talk about that in a minute because we're going to focus on the semiconductors this week. But we're going to start off first with a side-by-side view of the Dow Industrials, the S&P, and the Nasdaq 100. Then we'll look at the Philly Semiconductor Index, talk about SMH a little bit, but I've got an issue with my data on SMH because of the stock split, which is frustrating. And then we're going to look at a few of the semiconductor stocks and see what's going on with them. So the Dow this last week was actually up 216 points. So after that big potential reversal type candle, got a little pause, just a little almost sideways up type of day, although we did go to a slightly lower low on the week than the previous week. The S&P 500 was down 14 points when you round it, 13.98 to be exact. And the Nasdaq 100 was down 247 points. So 2 strong weeks down here with the Nasdaq 100. Okay, so let's go back, take a look at the, I'm going to look at the Philly Semiconductor Index. Now, I left these circles on the chart. This is a weekly view because 3 weeks ago, on the video of July 22nd, if you want to go back and take a look at it, is the video of July 22nd, I talked about the Philly Semiconductor Index, and I said this activity, this up, down, up, down, up, down activity is looking very similar to the type of exhaustion that was happening back here at the end of 21. Well, and then what happened? Actually, what did if you go back and listen to the video, I said, is this running out of steam? It may very well be. Well, that was the end of this bar right here when I did that video. So within the following week, another up week, and then the last 2 weeks, and it looks like we're coming down hard. So this is the picture I've got. Right now, I've got this labeled as 1, 2. It may very well turn out to be an A, B, C, and a very big C. But for the initial move down, I think right now this makes sense. We're looking at this kind of a move. We've had a deep retracement on this second wave. There's no doubt. When we come down and take a look at the daily view, here's where we're looking at. And I'll tell you what, before I get there, I'm going to just show you something because I'm talking about semiconductors. Let me just go back and get this lined up a little bit. Do this. So we've got weekly and daily side by side. And I'm going to go, let me show you this real quick. So this is the ETF dashboard that I walk through with my members every weekend on the weekend market analysis. Okay, so this week on the 16 sectors I look at, 10 were up, 6 were down versus the 1 up, 15 down on the previous week. Well, look at what semiconductors did this last week. The SMH ETF down 5.21%. Now, it is still substantially higher than anything else for the year, but I really believe this may have run its course, okay, up 44%. It was higher the previous week, but yeah, this led with this kind of a move to the downside, pretty good whack that this thing took in here. So this is where I'm sitting with the Elliott wave picture. I'm looking for this to head south. Let me look at the moving average view in here. You can see what we're looking at. These gaps really jump out at you on the stocks. The reason I'm not going into this detail on SMH is because my provider, for whatever reason, when a stock or an ETF splits, will not go back and adjust historical data, which is really frustrating. And I know they split 2 for 1 in April. So here's the semiconductor index. They just mirror each other in reality, but pretty hard down over here on the weekly view, closing below the 10-week moving average. Yeah, it happened back here in early April. But right now, it's just, like I said, it looks so similar to what happened at the end of 21, and the wave count just fits also. And then here's what's happening on the daily chart, and then we're coming down pretty hard. Now, here, look at these gaps down here. So this gap was created on May 26th, okay? We're talking about this first gap between 461.39 and 466. So 461 and 466, and then down below it, an even bigger one at 432.73. So let's just say 433 to 446. That's a pretty big gap that was made on the day before. Okay, so these gaps have not been filled, and here we are coming down. Now, does that mean this is going to get filled on Monday, Tuesday, Wednesday? No, I'm just saying these are targets. And what's the old saying with magnets, with gaps? They have a tendency to act like magnets and draw prices into them. Now, sometimes it takes weeks. It all depends on where the gap was. Now, we're going to look at one on Qualcomm that's taken months, and I'll show you where that is. Okay, so this is the picture on the Philly Semiconductor Index. Yes, it looks like it may have very well exhausted itself and is rolling over and heading south. All right, let's take a look at number one. Let's take a look at AMD. Okay, so here's the weekly view on AMD, and you can see it peaked back right when the Nasdaq was peaking at the end of November in 21, okay, and it came down hard, got this retracement in here. What did we retrace? Let's just take a quick look. Not nearly as deep as the Semiconductor Index in here, but still fairly deep in terms of the retracement, well over 61.8%. Looks like about 2/3. If I had to ballpark it, I'd say maybe in that neighborhood, 66%, 67%. So, and by the way, 2/3 is a Fibonacci relationship, right? 2/3, both 2 and 3 are Fibonacci numbers. So anyway, we've got the deep retracement, and look what's been going on in here over the last several weeks. What, 2, 4, 6, 8 weeks? Trading sideways in this range. So keep an eye on that. I thought maybe we're going to get a big breakdown out of that range on Friday, but it didn't do it. It just kind of like, stuck its nose over the line and then ducked back in and closed right back up into the range. So I wouldn't call that a breakdown, but we'll see what we get. Now, it has been down now 4 days in a row. So wouldn't be surprised to see it pop back up a little bit and then break down out of that range. But that's the picture we've got on AMD. Let's take a look at Micron Technology. Look at this big picture on MU over since going all the way back to the 2000 high. It is not broken above the high that was achieved back in 2000, July of 2000. Pretty amazing. And, it went up, tested it in 21, came back down, came up, tested it again in January 22. And that was pretty much, I think that was the peak right there. And in the first week of January when the S&P and the Dow peaked. Okay, and then we've had the move down. This almost looks even shallower than what we just did with AMD. Let me take it off a semi-log for a minute. When I go to really long-term, or when the scale has a 3-to-1 ratio on the side, I definitely move to the semi-log view. But here is the retracement. So yeah, just a little over 50%. That's all we've gotten out of this. So pretty weak picture in my opinion. Let's take a look at the daily view. Yeah, we're rolling over, breaking down. Look at all the last 4 days below the 10-day moving average. The 10-day is now breaking down below the 21 in here. And let's just draw a little trend line right over here from this point right here. We're rapidly approaching that trend line. Okay, so that is the picture we've got on this, weaker than AMD. Let's take a look at Qualcomm. So look at this long-term picture on Qualcomm. Here's that 2000 high, January of 2000 when the Dow peaked in January. And it broke above that 2000 high in July of 2020, came back down and came almost exactly right to it in October of 22, rallied a little bit, and then comes right back down here again. And we'll take a look at it. Right down, testing again down here with the low in May of this year. So again, you know, from the move from the all-time highs down, the rally off of it, very weak, even weaker than what we just looked at with the THEMU. And so now I think the thing that's really interesting when I look at the daily view over here, look at this gap that's right down below those lows. This gap was created in July of 2020, okay? So we're talking 3 years ago, and this gap is pretty much held, and that is that gap is when it broke above that 2000 high, right? Right here. See the red line for the 2000 high? That gap was created when it burst up through there, and here's this big gap. And so what these have done, they've come down and they've come right back down into the neighborhood of the 2000 high, and is the top of the gap. That's what I was trying to say, the top of the gap. Again, the top of the gap and the 2000 high. So this is going to be really, really interesting. If the semis are rolling over hard like it looks like they are, like they're exhausted, and we come down in here, are we going to, for the third time, make an effort to go back at the 2000 high and close this gap? We're talking about a gap between 93.62 and 100.48. So this is going to be really interesting to see how this looks at, and like I said, this is even weaker. So we've gone from AMD to MU and Qualcomm, and each one of these rallies have looked weaker. Well, let's look at the star of the show. We're going to look at Nvidia. Now, we've looked at Nvidia many times before, and here's the picture. Let's just go to the weekly view. Okay, this is on a semi-log view, and that's because the scale is so huge in terms of the movement. Here's the March 2020 low of $45.17. Here's the high that occurred in November of 21 when the Nasdaq was peaking, and you can see then the counter trend move that's occurred back up here and taken out the high. And I've said this before, I've got my doubts as to whether or not this high is going to hold. This is the only one of what I call the Super 8 down here that has been able to stay above the all-time high that it achieved so far. Okay, but here we are coming down. We just closed below the 10-week moving average on Nvidia for the first time since back over here when, you know, at the beginning of the year, you know, December and the first week of January, and then we burst above it. So we'll see what kind of continuation we get to the downside. When I look at the Elliott wave picture, I'm labeling this as an A, B, C. Yes, it's a big B wave, but I think it still fits, and that implies a 5-wave move down for the C wave. We'll see what we get. All right, so let me go back over here and take a look at this picture on the daily, see if it's really, and it doesn't help us a whole lot more, except we are definitely seeing divergence showing up with this flip that's now occurred to the downside in here, the 10-day breaking below the 21. And again, I use a 10 exponential and 21 simple because I like the fast moving of the 10 exponential crossing over the a little bit slower, longer term 21. And this is a 55-day simple, okay, because I like using the Fibonacci numbers, except I'd use the 10 for whatever reason. I've done it for a long time, and it's something I got from a couple of guys a long time ago. All right, so anyway, this is the picture, and I'm looking for this to come down. We got a big, talk about gap to fill. There's a huge gap in here. Even if you just said to this high right here, you're talking about 318, and the low in here, 366. And then here's that high at 346. Okay, that's the picture on these 4 semiconductors. Yes, this has been the star of the show. We'll see how much longer that is going to last. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great week. We'll talk to you on the next video.